Okay, traders, good morning and welcome to this live intraday strategy webinar on SB Trade Desk. Today is Thursday, January 7th. Mike Boutros with you on the line. Great to be with you guys this morning. Man, where do we begin? It's been a interesting 24 hours. Ted, great to be with you. Good to see you, man. Same to you, Jay. And some markets are on the move, some markets aren't on the move. We're still under the same theme here of the press, right? Where the stretches are getting really, they're stretched, right? We're looking for that exhaustion signal. Personally, I'm just involved in Euro right now and the sterling trade that we're on the swing setup, but we're looking for validation on some of these moves. So we'll get a quick look at DXY today, not much there, but Euro, sterling, dollar CAD, Aussie dollar, Kiwi dollar, dollar yen, gold, and obviously have to take a look at the SPX with that same slope holding. Incredible. So let's jump right in. As always, guys, feel free to throw out any questions or trade setups you want to review. Here's what it looked like as we opened up the week. So euro dollar, the basic premise of this whole setup was this 88.6 retracement. I'm going to take a step back. Sorry, DXY real quick. The only thing I want to highlight here on the DXY is the level that we've been talking about for literally 4 weeks, 89.93. That's the 88.6 of the entire 2018 advance. We also have downslope support. And while we are trading below that now, we have not materially closed a weekly close there yet. Okay, so this week is going to be important. Tomorrow is going to be important with respect to how we close, where we close with regards to 89.93. Just a level I've been watching has been a pretty decent pivot in price. Again, until this week, I still haven't seen a concrete close below. Okay, on the daily chart, looks like this. Nice little reversal candle. Yesterday looked like it was going to surmount to something. Didn't get much of an extension. Here we are again, 89.93 as resistance. Looking for a pivot there today. Weekly chart, daily chart rather, doesn't really have much. On the downside, I don't have anything till 89.07. That's the 2018 low day close. On the upside, I kind of want to clear this slope near 90.25, 90.30 to validate a turn in the dollar. So we're still, right? We've been noting the ongoing divergence momentum that we've seen since last year with the oscillator making higher lows as price action made lower lows. Still, that's not the trigger, right? So things look like they could be shaping up. Don't quite have the validation yet. Here's what it looks like on the 4-hour chart. I'm really inclined just to get rid of that slope, but again, I'm kind of using that 90-30 level. Again, that's the breakout zone in my opinion, which would give us a little bit more of a lift here. All things held constant, it is a simple weekly opening range right below resistance. And guess what? Big major event risk on tap tomorrow. So obviously tomorrow's non-farm payroll report is expected to be a bit of a disappointment. ADPs were weak yesterday, a precursor to the more encompassing government non-farm payroll. Expectations are for print of just 71,000. All right, so we got a previous read of 245. The month before that was in the 300s. So obviously the employment growth is starting to taper off. Unemployment is expected to uptick to 6.8 from 6.7. Obviously, the caveat there, we'll always be looking at the broader labor force participation. Remember, when that contracts, expands, tends to put artificial movement in unemployment. But something to take into account definitely as we head into tomorrow's trade. Also keep in mind, we'll be going over dollar CAD in a moment, but also tomorrow, double whammy Friday, we get the CAD employment data release as well. They're expected to see a contraction of 27,000 jobs last month, with unemployment there also upticking from 8.5 to 8.6, so another 2% off where we are. That's what I'm looking at with DXY. I'm looking just to clear this range. Again, ideal scenario, Mike Boutros' world in a roses and rainbows. If we were to break hot, if this is going to turn, right, it's the breach here to see an accelerated pop through here and kind of give us a little bit of a recovery, if you will, on some of the decline that we've seen. Now, I don't want to get too much, guys, into the weeds as far as the politics concern and all that stuff, but what I do want to say is people are asking, like, how is it that SPX, through yesterday's disaster is kind of just rallying? How is it that we haven't seen the risk off trade, in such an extreme scenario. And you have to take into account where the markets are currently trading. Gold saw a phenomenal decline. Everyone was talking about it all over the place. It was all over the headlines as it was declining. Why is gold declining when there's, you know, essentially a coup happening or whatever? Again, gold, we'll look at that in a moment too. I don't want to jump the gun here, but we came into a beautiful support and bounced. We're still within the confines of trend. So before anyone makes any assumptions and starts to change their technical outlook based on what happened, let's keep in focus what's going on with the price action. So that's all I'd say on that. Move on. Here's euro number two. Here's where I'm a little bit more involved. So euro on the weekly, and here's what euro again looked like into the start early in the month, early in the week. The 88.6 retracement, 23.37 is a level that we had highlighted for a couple of different weeks. It's basic slope resistance, the 88.6 of the 2018 decline. Isn't that funny? How we got the DXY, the 88.6 of its ascent. So, some symmetry there. Here's what the daily chart looks like. You're marking some ongoing divergence again into this high upslope resistance. Here's what it'll look like on the daily chart, and here's what it looks like now. Okay, a little side-by-side comparison there. So higher highs, higher highs. We even made another higher high. And this is where I thought it was prudent yesterday. Try to pull the trigger. So far, it's working. We'll see how if we get the actual extended break. But look at this trend line, guys. Look at this channel line. It's been tested. We always say 2 tests is speculative. Third test is confirmation. Well, you've had like a third test, a fourth test, a fifth test, a sixth test. This thing's been pretty solid. So a daily close today below that slope would at least initiate the beginning of a near-term pullback here in euro. I'm not getting aggressive. We're not calling this a high. We're just calling this a corrective pullback. Initially, 21.45 is where you'd look for a little stronger support bounce if you do get it. Okay. Anything north of the highs we've made, 23.36 on a close basis. The high week close comes in at 24.09 from 2018. And then beyond that, you're straight up looking for the 2019, 18, highs into 25.50. So, man, oh man, it's perfect place in price. It's the perfect place in time. Okay, here is your monthly open. Again, we're just opening up the months. I'll be dropping in the monthly markers here at the end of this week. And we're looking for a reaction. We're looking for a reaction. If you're not holding anything, a good area just to stay paused and set, ready to go. If you are holding shorts or you jumped on that trade, break even, stop against the highs, kind of the max side push it because we're still trying to call a high on this basically. And stay nimble. We'll see if this pans out. Here's what it looks like on the intraday chart. Okay, and let me show you the 2-hour chart. This is what I showed you last night. So again, this is a 4-hour actually. Here's where we were into the start of the week. Need to close below or a break below at least the 2020 close. That was 22.15. That's where we closed on Thursday before the holiday. So just below the monthly opening range low, just below the weekly open, okay, 22.38. That's where I need to see to validate the turn in price. So we're not quite there yet. Here's the first break of near-term channel support. I was glad to wake up and see that accelerated drop there, taking to the lows on this recovery. I want to see failure basically ahead of 23. Okay, I'm short 23.10. So break even stop on that at this point. So if we get past that, we're probably going to get into a 24 pop, and then we'll try to do it again there. But on this rally here, I really want to see 23 hold resistance, break lower, 22.15, look for a pivot there on 21.45. Questions on euro? All right, NFP's on tap, don't forget. Okay, sterling. So we're involved here also on the swing side of things. Sterling looks good. Very similar stance, right? Heading into the start of the week. Here's what the weekly chart looked like. The major level of resistance that we talked about was the Brexit gap, okay? That gives you 36.75. We closed there last year, literally on the end of the year. We closed right at that threshold. And to start off the week, we were looking for inflection. It was either a breach, in which case you're likely to see an accelerated pop, or a rejection hold. I don't want to see price sit here is the point. Now, we've gotten some, well, first of all, I also want to note, that basically, again, you kind of making those same equal highs in momentum. You see the same high that we made in late 2019. Here's the same highs in momentum last year. Here we are kind of struggling again at that same momentum peak. So something to keep an eye on the weekly chart. Here's the daily, kind of messy, right? Kind of messy, but here's the grind, guys, into 36.70, right? Here's the grind, ongoing divergence, right? Price action, lower high, higher high, higher high. All the hallmarks are there. Now a 786 of that drop, just above the Brexit gap at 37.43, that was my line in the sand. Above that, I really don't have anything till 39.90, basically 140. So it's all about whether the failure materializes here as we mark divergence into uptrend resistance. These are the setups we long for. Okay, here's what it looks like on the intraday chart. I told you earlier in the week, I don't have any sort of conviction, okay, on using this slope, but it's still continuing to give us some guidance. And the whole premise of this slope, guys, was that if the outside day reversal that we made back here on the 4th was material, okay, I would want to see that slope resistance start to hold. And lo and behold, the rebound off of the median line failed right into that zone. So I'm starting to like this either way, even if it's a near-term consolidation, that slope has merit and continues to highlight 36.75 as resistance, 36.58 on the bottom side of that zone. Ideally this holds here, but at the end of the day, we need that move into 35, and that's really the pivot. We'd want to see a little bit more of a buckle if we're gonna correct lower. All very precarious positioning right early into the month, early into the year at resistance. I'm loving this move. I hate that it's taking so long and you get that FOMO where you want to see things start to move, but patience pays in this. I think we get a nice move here. If the inflection happens higher, like I said, it's likely to be really accelerated. This is a big zone, big zone. And again, nothing tells it better than the weekly chart. Huge, huge zone, right? Major yearly swing lows, a break with an accelerated break lower, 2017, 2018, clear pivots in price, resistance, breach, acceleration, support, break, acceleration. We're there right now. Questions on British pound? Yeah, I see your question. The lockdowns. I mean, the lockdowns are the lockdowns, right? I can't trade that. There's no way for me to effectively, I don't want to filter too much of that noise into the decision-making process, especially as it pertains to where we are right now, as in price and time. Like I said, we're at a big zone. Lockdowns or not, if the pop happens, I'm expecting to see acceleration in sterling. If not, it's a good place for this thing to exhaust a little bit. So we'll see. We'll see. Is dollar CAD. So quite interesting. I'm not in a long, regrettably. I want to be long, but I don't want to chase from here. Here's the deal. Here's what it looked like right into the start of the week, right? The December 17 December reversal close right here. It's kind of a near-term support we were looking for. This was the bigger sort of whopper of a spot. Okay, it's the 786 of the entire advance off the 2017, low. And then you have the 2018 objective yearly open, which again was a clear pivot in price in the 2018 advance. Both of those levels converge on what? Slope support. The same gradient for the pitchfork we're in off the yearly highs sneaks in right in there. Add some sugar on that. Basic channel support for the current operable downtrend that we're in, right? Also converging in this zone. So I'm not going to lie to you guys. I was looking for an entry between 25.80 and 26.19. Guess what? The low was 26.29. Okay, 10 pips off. Again, sometimes if you're a little too stubborn, a little too meticulous, too cherry picking, you miss an opportunity. Listen, I don't know if that was the low. We'll see. This is the weekly chart. I'm showing you from 1,000 feet up, but just to highlight how critical of a zone and why we were looking for that exhaustion there. Is this it? Well, here's what the daily chart looks like. Pretty nice reversal candle yesterday, right? Long tail right into that slope. This is the 25% parallel of the current slope we're in, just off of the September, November highs. Pretty clean on support, pretty clean on that parallel, pretty clean along the median line, which is resistance right now. 27.80, that's the level, again, that would at least encourage a larger pop. If we get, and again, I'm talking on both sides here, guys. I don't want to like pat it so hard, but listen, I'm not in it. If we get one drive lower, I'm still looking at 26, 25.80, 26.20. That's still a zone for me. I'd be interested in fading a drop if we get some compelling price action. Again, this was radical divergence, right? With price action making a lower low and the oscillator making a higher low back above 30. So again, when the reference points get closer to the 50 level in RSI, those are typically stronger signals. And again, don't take my word for it. It's all about the close. Lower low in price, higher low in the oscillator. So again, the hallmark is there in price, in time, for it to be some sort of inflection. Okay, if the dollar is going to break, again, anything sub 25.80 probably sees this thing shoot to hell pretty quick. So that inflection is what we're looking for. Here's what it looks like on the intraday chart. Okay, let me get you back just to the 4 hour here, as it were, as I showed it back back on the 4th. There was the weekly open. Nice bounce right off of median line support. Here's the rally. Failure right there at 27.82. That held, and we moved down for a lower low, but still sort of holding that slope. Here's another bump higher. Really messy price action. I'm interested in a low into this zone. If we pop through 27.80s, okay, let's just call it 28. It's going to be an objective break of the month of the weekly opening range high. You look for, again, 28.80. So Looney in focus ahead of double whammy in Jobs Friday tomorrow, with employment out of Canada and NFPs released at the same time, 8:30 Eastern. Questions on dollar CAD? Okay, Aussie. Here is what Aussie dollar looks like. So another one I am stalking with great interest. Haven't gotten involved just yet. Here's what Aussie looked like on Tuesday night. I guess this was Wednesday, not Tuesday. A little more room on the upside was what we highlighted. The 2018 open into the 88.6. You're looking like just shy of 78.30s. Here's Aussie on the weekly chart. 78.36. The 2018 open comes in at 78. I was looking, again, really good area for this thing to start to exhaust. It's the beginning of it. Looks like it could be promising. Looking for follow through today. Mind you guys, specifically here on Aussie, it's absolutely phenomenal. Outside of this 1 day pop right here, outside of this 1 day pop right here, what is that? That's 7 days, 8, 9. You've had 9 updates out of the last 10. That's pretty phenomenal. Pretty phenomenal. It doesn't mean it's got a peak, but it's a good area to look for some exhaustion, specifically into not only trend slope resistance, but also those lateral levels that we talked about, including not only that 88.6, not only the 2018 yearly open, but also some swing highs from back here in 2016. Actually, the 2016 high. It's loaded. It's loaded. So again, an area of inflection. Anything northbound of 78.36 on a weekly closed basis, you're looking for 80. You're looking for 81.20 up here. Okay, big zone. If inflection starts to happen, we get momentum break back below 70. We start to get some near-term things. Well, then here are the levels that we're looking at. Here's Aussie on the daily chart. So again, the initial touch looks good. I don't have on here, guys, you might see a little difference, just the 2018 open. Not sure where that went. To give you that range, we're right there. There's the zone. We just went into it and we pulled back. Here's support, 77.32. Nothing's changed on the levels from earlier in the week. So again, here's the daily chart. So we stretched into this mark, beautiful, pulled right back, and we're sitting right there at 77.23 or 77.32, excuse me, as near-term support. That's also the 75% parallel. Inflection here. Buckle lower. I think it opens up a larger pullback in Aussie. What does it look like on the near-term chart? One more piece of evidence in case all of that wasn't compelling enough. Nice momentum divergence. Now, weak signal because both reference points are above 30. Nonetheless, something to keep an eye on. Also, I'm not a big fan, or I'm not a big advocate, or I'm not a big user these days of support triggers and momentum, but they can oftentimes be telling, and I think this is one where it will. If we get a daily close below that slope and momentum, we get a daily close below 77.32, look for a deeper cut in Aussie. Keep in mind, guys, all of these trades are going against the grain, right? The conventional wisdom these days is, yeah, short the dollar, right? More Fed printing. Now you got a full Democratic House. They're going to spend, big government, more spending, more liquidity in the markets, spurring economic growth. That may be the case. That may be the longer term prospect. That may be the broader encompassing theme, but that's irrelevant to the point that markets will still hit resistance, markets will still correct, markets will still pull back and breach higher, and we're going to get some of that back and forth. It's been a one-way trip. So we're just looking for that reset. Again, the 2018 Open, sorry guys, I'm not sure why this got deleted on. Let's go. All right, there we go. And here's what it'll look like early in the week. Right into the start, saw that breach, 87.32. Keep an eye on that 88.6. Again, I'm sorry about that 2018 Open, which didn't come into play here, but there it was. It was on the weekly charts. I'm not sure why it didn't populate on my intraday charts, but in any event, big zone, big zone. And at this point, you have a set weekly opening range right below resistance, even if it pops higher. And this is the one thing I wanted to note. Even if it pops higher, I wouldn't put it past this thing on some sort of misprint on NFPs. You got beautiful divergence. I love the initial move, but if it were to pop higher, don't forget you have slope just higher into the 79 handle. Wouldn't put it past this thing, okay, on some sort of upset tomorrow, or some sort of, I don't know, God forbid, more political chaos, whatever. The top side, if it breaches, don't get suckered in. We could easily go for a tag here and pull back. Not my ideal scenario, but that slider, that secret resistance there in 79 is something I'll keep an eye on if we do push higher in Aussie. Questions, comments, concerns on Aussie? Another one I'm very involved in, very interested in. Let's see how it pans out. Now, Kiwi is a similar scenario, albeit I'm not really what do I want to say on this? I would like there to be a more significant resistance zone we're turning off of in Kiwi. See here, this is big. You have a confluence region, you have yearly opens, you have Fibonacci, you have slope. Kiwi, well, I just don't have the same kind of conviction, right? This is a slope parallel, guys, of the same gradient that we were following here. I think this has any merits right now. The last horizontal lateral level of resistance was 71.11, 71.50. That's our big zone. Once that broke, yeah, okay, maybe this does something, but I don't have something, up here. And I love to trade. If you're going to take a counter trend trade, even on an intraday position, you want to be slamming the big levels. Okay, it's just not prudent to try to counter trend trade when the market's rallying and try to sell it unless it's a big conviction level and you have concrete technical factors in your term that are like showing exhaustion. I don't have that here, right? Aussie, a little bit better. Kiwi, momentum is deeper and overbought here. I don't know. I don't know about Kiwi, but it's a level to watch. Here's what the intraday chart looks like, or excuse me, the daily chart. Here's what it looked like earlier in the week. All right. So the break above this level basically had us just looking higher. The 618 retracement is at the 618 extension, excuse me, is at 73.32. We petered out at 73.15, 16, 17 pips off that. Could that have been it? I just don't have enough conviction here. I will once again note the ongoing divergence here. You have 3 reference points on lower highs and higher highs in the oscillator. Again, all above 70, so tend to be weak signals. So the factors are lining up. The significance, the conviction on those factors is low on Kiwi, but certainly I'd love to see the start of something here. Here's what it looks like on the intraday charts. Okay, so it's pretty radical that the same pitchfork has continued to hold, right, all this time. Again, here's the 75% parallel, not the cleanest, but weekly open support 72, 71.50, weekly opening range low. This is the zone that needs to break to validate, in my opinion, a little bit more of a reversal, excuse me, right, that 71.11 level, basically right there. So we will see on Kiwi. Not much event risk on here for the rest of the week. So we're going to have to kind of watch broader sentiment and market price action for the dollar on this one, but the same exhaustive trade. It's a very similar theme. And I want to say one thing. If you are looking at these setups with me, guys, don't load up in a binary direction, meaning don't go short euro, short sterling, short Aussie, short Kiwi, long dollar CAD, and put all your apples in a dollar long trade, because you will get massacred if this thing doesn't play out. So I'm a big fan in these kind of scenarios for the synthetic hedge. So, take ancillary positions in a euro yen or maybe even a euro Aus position if you want to offset that. I personally, just a disclaimer, don't. I'm short euro dollar outright. We took a quarter of the trade off on that drop yesterday. On the rest, a deeper cut here, but we're recognizing where we are in price and time, and recognizing that if you're wrong here, we should be wrong quick, and the accelerated pop should be quick also. If we're right and we're starting to make at least a near-term corrective move, what an entry this would be. So things to take note of here on that euro trade again. So that's all the majors. I want to hit dollar yen real quick, and then we'll get into gold and SPX. Here's dollar yen. Abomination, just, the word comes back every time we try to look at this. I don't know. Here's I'll come back to the gold trade in a moment. Here's dollar yen. So this is the chart I showed you guys yesterday. This thing is, I just wanted to highlight it for reference because it's the first time I covered it this year for you guys. I'm not touching this thing. If this week ends up being an outside reversal candle higher, my interest would be sparked in dollar yen. Dollar yen specifically hasn't seen an outside day reversal to the upside for quite some time, but the last one was right here. After that was right here. Since that, we haven't gotten any. Okay, so I'm a big fan of using those candles, specifically exhaustion trades, in again because they offered such telling reversals before that, and they have defined major market lows. There's one right here as well, right? So I want to see what materializes this week. That would necessitate a close above last week's high at 103.90. The big region of resistance, nothing's changed there. 104.12, 104.45. That's the breach to suggest that dollar yen is at least in for a little bit of a breather from this decline. It's the weekly chart. Here's the daily chart in dollar yen. So yesterday was the first start. It was an outside sort of range. The body didn't cover the previous body, so I don't want to call it a true outside reversal, but sort of the onset of it. Here's the first test of basic channel support, or channel resistance rather. I want to see this thing start to pop from here. Also note these swing lows from last month, November and December, opening range low. This is first area of resistance, right? So I don't want to make any assumptions here on dollar yen. Here's what it looks like on the intraday chart. I just wanted to highlight that we were coming at least for a test of that near-term resistance zone for that channel, and we got it. Here's what it looked like last night. So we had set up a pretty decent weekly opening range. I told you guys to look for this. Here is the resistance level. I think I highlighted 103.60, right? No, I didn't give you the level, but here it is. At channel resistance, right? Looks like a break of the weekly opening range. So I'd be inclined to look higher if any pullbacks here stall essentially into like 103.30s, 103.40s. So this zone, here's the opening range high for the week, if you want to count that high from yesterday. But essentially, as long as the pullbacks hold here, yeah, I'd actually be looking for a little bit of a pop higher. And once we were to get that pop, guys, or if we do get that sort of accelerated move, then we start to consider and see if we can come up with any gradient slope to the advance. And this was something I was looking at before the webinar. I don't want to put too much emphasis on this, but if we do continue higher, specifically with a breach of last week's high, this does highlight what? Well, the same level we were just talking about, 104.46. That would converge on the upper parallel, basically into the close of this week, start of next week. So too early. I don't want to put this on. Don't get married to this slope. It's something that we will consider if we do see that pop higher. And again, like I said, on pullbacks, slope resistance rather at the former opening range high, even if you get into the lower parallel, that's not much lower. But that's what I'm looking at with dollar yen here. We'll have to see if sentiment shifts. Now, speaking of sentiment, everyone's talking about gold and SPX, and I'm going to show you these two charts with a little bit of excitement here. I love how this is playing out. So first of all, gold on the weekly charts. Just as a disclaimer, my wife works in high-end jewelry and high-end base custom jewelry, and so they're tracking gold prices always very closely, and she's always asking me about it. This is just insane how this panned out. Here was the break, basic resistance. We started the year telling everyone 1909 into 1900, watch that $10 range. It's important, it's pivotal. Former high close for the record high that we made in 2011, former 2011 high week close for that year, okay, and basic channel resistance. We rallied right into the close of the year, closed right there, popped higher. Where did the rally fail? Again, at the 618 retracement, 1956, at the same time it happened. It happened once before here. Here we are again. Now we're pulling right back. The pullback and the sell-off yesterday didn't break support. And this is why I think this is critical right here, right now. Again, 1900s, that same pivot zone, former slope resistance turned support. If this is a true breakout, this should hold. This should hold. With the same respect, guys, this is also now the monthly, yearly open. Also in that range between 1898 and 1909. Absolutely pivotal region. So I'm all about what happens here this week in this zone. Don't get bearish excessively unless this breaks. It was a beautiful short trade, and I'll show you that in a moment, off 1956. Absolutely stunning. Now we're at support again. Here's XAU on the daily chart. Again, nothing's clearer than this. Beautiful outside daily reversal yesterday, which I noted in the report off of resistance. Slammed right into former or current operable uptrend support. Former downtrend resistance turned support. It's all about this. Just lower what I'd marked on the scalp as the intraday, or as the bullish inval, is right here at 1888. 1884 is your 38.2. Both of those converge on slope into the next couple of days. Anything beyond that, and I think you're looking for the risk for a much more resumptive close towards 1800 again. So really is all about what kind of support, if any, that gold catches in this zone right here, 1888, 1900. I know it's a $12 range, a little bit bigger, but guys, we're just opening up the month, just opening up the year. We got to give a little breathing room here. Okay, ideal scenario, all things held constant. Here's the median line. This is support. You start to rally. If this is really a continuation, that's got to hold. I happen to think there's a little bit bigger of a threat for a deeper setback on account of the dollar strength or dollar weak, near-term recovery if we do get it there. And the fact that sentiment isn't really all that shaken. I'll show you the SPX in a moment. So where does that leave us on the intraday charts for gold? Well, that's even cleaner, guys. Here's what that looks like. And here's what it looked like last night. Okay, so really nice reversal. I showed you the 2-hour last night, so I'll bring that back here as well for the sake of consistency here. But you can see, again, that pullback right into 1898 slope support. Here's the first bounce. Gave you guys 1920, and I want to see failure ahead of 1937 if we are moving lower. Still need a break below the weekly, yearly open right here at 1898 rather. And then the 1884 level, that's the level that opens up the downside. Basic 38.2 retrace of an advance typically will give you, if that breaks, the deeper cut. I mean, the 50 and the 60 are down there, but that's not the point. The point is to validate the reversal rather. That's what I'll need in gold. Questions on gold? Last but not least, here's SPX. And guess what? Same slope still in play. Unbelievable. Unbelievable. By the way, gold on the previous chart, another one that was just stellar. Here's what we showed you guys earlier in the week. Here's how it panned out. Here's the pullback. Same thing on SPX. This thing has been ridiculous. This is the same slope, guys, from the November lows. We haven't changed anything. All through the month of December, all through this yearly open. Here's where we opened up, failed just ahead of trend resistance, slammed into trend support. That held on a closed basis. Here's the recovery. Now we're just holding the highs. Look, pop higher. There's really nothing until 38, 38.05 if you want to get really fancy with the slope. Near-term support right at that slope. That's 37.50s, 37.47, right? There's really not much to say. There's really not much to say. Trend is holding well. Momentum doesn't seem to have taken, or sentiment doesn't seem to have taken a hit from the events of yesterday. Look, for me, the way I'm treating this right now, near-term consolidation, triangle formation, whatever you want to call it, wedge. If we breach higher, a lot of those can be terminal thrusts. So you look into that 38 handle, you look into that big figure, you look into that upper parallel, look for reaction here. Remember, guys, we're in record territory. There is no lateral levels from here to use as reference points. Once we start getting some more back and forth, we can start to take some extensions and start to look for some measured moves. But at this point, it's all slope. So keep that in mind. Again, I'll zoom this out just to give you the reference points again from the high on November 10th and the low on November 12th. And just keep that slope in play. Keep that slope in play. All right. That's everything on my list and wraps it up on this end for the week, guys. Keep it nimble. NFP and CAD employment again on tap tomorrow. We are trading at some phenomenal levels. Keep the powder dry. If you're in some of these trades against the prevailing trend, meaning we're trying to buy dollar positions, listen, heading to the close of the week, heading into NFPs, just play it light, okay? If you're in the money, take a little off and go break even. If you're not in the money, just open up your stops and let it be an acceptable, make sure that you're always, obviously, your capital management risk reward is always there, but just stay nimble because we are at big levels. And if the inflection happens, okay, if DXY fails and we just break lower, right, there is room for a lot of these trades, guys, to run. So I don't want to get aggressive. I don't want to get caught on a dollar long setup trying to fight this if it's going to just continue lower. Watch this week close with respect to 88.93. And I will see you guys all on Monday morning for the free session on daily effects right back here on SB on Tuesday. and Thursday. Jay, thanks for the clean setups. Have a great weekend. Same to you, Ted, Aurelian, CB, Jay. Have a great weekend, guys. See you on Monday. Cheers.